Gary Wagner joins us this Friday. Gary, good to be back with you.
Great to be here also.
Now, Gary, last week when we spoke was before the Jackson Hole meeting, and you weren't feeling so good about the gold market at the time. In fact, you were looking at revising your models. This week, things have picked up. What are you seeing now?
Well, last week was interesting, and the fact that we dipped below 1280, which was and is a critical number to me, genuinely brought upon some concern. We actually saw the market move, I believe, to an intraday low of about 73. And my sentiment was we needed to stay above 1265. But the interesting thing is really strong support came into the market, and then all throughout this week, of course, moved the market back over that 1280 point. So it gives me a little bit more optimism.
Gary, we've also seen more positive economic data emerge from the U.S. We had durable goods this week. We had consumer confidence that continued to be at a 7-year high. We had U.S. second quarter GDP growth revised upwards to 4.2% on Thursday. What is this data? How is this data impacting gold?
Well, we've got a push-pull scenario in which we still have some global hotspots that are bullish for gold. The economic data, the equities markets itself have put some pressure on gold, and we're still seeing slight moves to the upside in gold. The interesting thing that I'm noting is that at the beginning of the week, we would see the market dramatically rise overseas, up $10, $11, $12, only to close up $3 or $4 higher once it got through New York and closed in New York. So there's absolutely a continuation of the sell side pressure, but the bulls have been able to really keep the market above 1280 and actually move it off of that point.
Gary, I also want to get your thoughts on the run we've seen in equities. It's pushed past the 2,000 mark this week. What domino effect could it have on gold?
Well, the interesting thing is throughout the series of record tops in the equities markets, gold moved in tandem. In other words, they were both positive up days throughout the week. And I found that to be interesting in that it almost seemed as though we had a removal of equities and gold. In other words, to me, a defined portfolio contains equities as well as gold, and it should be a combination of the both, not one or the other. And so you had money going into gold and money going into equities.
Now, Gary, next week we have a shortened trading week. What can we expect? Also, many traders will be back at their desk. Can we expect more volatility next week?
The big news next week is the fact that we are going to be seeing traders return to their desks from this long summer vacation. And it's the light liquidity, light volume that has really baffled many traders throughout the summer. So we had markets moving in extremes because of that. I think we'll return to a more consistent normalcy once traders return.
All right, Gary, let's get to your insert now. What have you brought us this week?
Well, we're going to be looking at gold in terms of the models that we've been working with, but most importantly, support and resistance levels that we're currently seeing, and what we need to see for a bullish scenario to unfold, and what would have to take place for a bearish scenario to unfold. But I do believe that most importantly, the fact that we've moved back above 1280 is absolutely significant.
Fantastic, Gary. On that note, let's get to it.
On our last episode of Chart This, we were looking at gold, which was currently in a dramatic decline as it traded down and actually broke below 1280. Now, 1280 is significant because it is a 61% retracement of the most recent rally. At the same time, we saw the equities markets moving higher and the dollar continuing to rise. So at the end of last week, what we really were looking at was an equity market at a record top, the dollar at a 1-year high, and gold under pressure. That was all about to change. By midweek, we were seeing the first signs of potential resistance within both the equities markets as well as the dollar index. At the same time, we saw gold prices really consolidating. The low that it hit roughly at 1273 held, and gold prices began to climb, reaching an intraday high yesterday of 1297. So my current take on the market is I do believe that gold now has support at 1280. But more importantly, we continue to see this market characterized or be defined with a series of lower highs and higher lows. So when we look at the big picture, equities markets at a potential top, dollar index at a potential top, support in gold, and the fact that traders return next week after a 3-day weekend, it tells me that we could in fact be looking at a market that is just about to break out as we approach the apex of this triangle. The price points are areas that I think are important to focus on currently in terms of support. We have 1280 just above it. The 50% retracement of this longer $200 rally is 1286. Market is currently trading just a couple dollars above that. On the resistance side, I see resistance, of course, at 1300, but real resistance, I believe, is at 1311. So my sense is, as this range continues to compress with traders returning, as we get closer to the apex of this triangle, I think that over the next couple of weeks, we could see a dramatic break in the market as we approach that apex to the upside or the downside. My sense is that it will break to the upside, but again, with a compression triangle, the prediction is a release of energy or a sizable move at the apex, not necessarily the direction of that breakout. For those of you who want more information on the topic, feel free to go to our website, thegoldforecast.com. Again, compression triangle is the most prevalent factor we are seeing within the market. We do have support at 1280, resistance at 1311.
Thanks so much, Gary.
It's always my pleasure to be here, and I want to wish all of our Chart This viewers a great weekend and prosperous trading and investing next week.
And thanks for watching this week's edition of Chart This. You can email us at newsfeedback@kitco.com. Wishing all of you a very happy weekend. Thanks for watching.